A brand new week calls for a brand new market story in PhillipCapital India's Monday Market Spotlight. I am Nikhil Rakka and today is 3rd March 2025. Let's get started with the daily market podcast. February ended on a rough note for the markets, with a shortened trading week still resulting in a staggering 20 lakh crore decline in investor wealth. The beginning of the March derivative series also reflected the pain as the market struggled to find stability. Throughout February, the Nifty had 20 trading sessions, yet only 2 closed with gains, highlighting the intense selling pressure. Support levels that were expected to hold firm kept shifting throughout the month, but ultimately failed to provide stability. Initially, 22,800 was seen as a strong support level, but despite efforts from the buyers, the level was eventually breached. The focus then moved to 22,500 level, which too gave way by the end of the week. Global uncertainties coupled with concerns over potential trade restrictions contributed to this decline. With 22,500 now convincingly broken, attention has turned to the next key levels at 22,000 and possibly 21,800. If the market extends its slide to 21,800, it would erase all the gains made since June 4, the day the general election results were announced. While the Nifty has tumbled 16% from its high in September, the broader market has taken an even heavier hit. The mid-cap index has declined by 22% from its highest point, while the small cap has shed a significant 25%. On Friday, nearly all the companies within this indices closed in negative territory, underscoring the widespread selling pressure. As the new trading week begins, market participants will closely analyze India's GDP data, which matched the expectations after a recent at 6.2%, along with auto sales figure for February. Meanwhile, US markets ended Friday's session on a strong note, though the gains were largely driven by index adjustments and technical rebalancing rather than any fundamental strength. Despite some inflows from global index adjustments, foreign institutional investors remained heavy sellers, a trend that reflected in the market's movement. In uncertain market conditions like this, waiting for clear signals of a bottom before re entering is often the safer strategy. When a market is in an uptrend, it is typically avoiding richly deep oversold levels. However, the current situation indicates persistent downward momentum, suggesting caution for investors until a clear reversal pattern emerges. Holding cash rather than investing prematurely can sometimes be the more prudent choice in such volatile environment. That's the update for today. Thank you for joining us.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.